Hi, my name is Rod Boothby. I'm the Global Head of Identity at Santander. Today I'm going to talk to you about digital trust and the Open Digital Trust Initiative. Trust is the biggest problem that we have unsolved on the internet today. We all know the problem. It's the spam that we get on our phone, it's the fraud that we deal with, it's the weaponization of anonymity, and the misinformation that feeds. Misinformation on whether or not to believe a product review, all the way up to things that confuse the public about how to respond to the pandemic. It costs companies a fortune. Protecting against privacy in the face of all of this includes things like 8.9 billion spent on eKYC, or knowing your customer, and GDPR compliance, another 8 billion on anti-money laundering controls. Refinitiv estimates that still we lose $1.45 trillion globally to financial crime. And McKinsey suggests that if we can solve this problem, we can add 3% to GDP in developed economies by 2030. So, how can banks help solve this problem? Well, let's look at identity in the real world today. It's a three-step process, even though we're not conscious of all of it. The first step is, does this person exist? Is there someone actually standing in front of me? Then you look at an official document. Then you determine whether or not they are really that person. It becomes complicated when you're online. You don't know who you're dealing with, and it becomes difficult to determine what questions to ask, how much information to extract in order to be able to determine who they are. Banks use a really complex set of systems in order to be sure that you are the only person who can access your money. They look at the network, they look at the device, they look at cryptography that's on the device, the location of the device, whether or not the device thinks that you are the right person, but they don't fully trust the device. They look at how you hold the phone. They look at how you interact with it. They look at facial recognition, fingerprinting, voice recognition. We run bot detections, liveness checks. We look for deep fakes. We ask for personal information. We ask for a shared secret. Only then are we certain that you are who you claim to be. The problem is that many companies ask for the same information. So often, when you sign up for an online system, you're going to exchange your privacy for trust. Let's look at the flow that you often deal with. You end up sharing that private information, including an official document, and the site ends up throwing it into their database. The problem is there's many sites, which means your information is spread everywhere and it's easy to steal. This is a deep fake. This person doesn't exist. Sites have come up with constant questions, but sheriff's offices are going to be telling you stop giving people your personal information. So how can banks help this? Let's look at a different pattern. Instead of logging in directly to a site, you can log in to your bank and have your bank verify your identity while not sharing nearly as much information about you. That means your information is kept safely with one institution rather than with many. The flow works like this. The person who owns their identity goes to a Reliant party and says, I'd like to log in. The Reliant party says, share a whole bunch of private information or verify with your bank. The person chooses to go with their bank, so they do. They log into their bank, and the bank provides the information to the Reliant party. Typically, when an account is first opened, the bank would charge for some extra verification information here. This is the flow that's used with OpenID today. You're familiar with it because OpenID is used when you log in with your Facebook ID or you log in with your Google ID. Only those are tech companies that are powering it, meaning that they're going to take that information and often resell it rather than protect it and keep it private. What we've done is to work with the OpenID Foundation to include extra information in the session token so that we can verify who the person is who's logging in. Let's go through a demo to make it more clear. Imagine logging in to a new social media site. Maybe this one's for people who like puppies. Instead of handing over a bunch of private information, the person can enter in their name, maybe something that separates them from somebody else who has the same name, and then they pick a bank that they'd like to verify with. A message gets sent to their bank app. They log into their bank app. The phone does its biometric checks. The bank also does its behind the scenes checks, the ones we just talked about. And then there's a message that says, this site would like to verify your identity. They'd like to confirm your name, what country you're resident in, how old you are. Notice that some of the information here is not as much as you would normally share. For instance, not the full details of the address, and yes, this person is over 18, but we're not going to share their full name. And boom, the account is created. It's all ready to go. The site is more certain of who they're dealing with, and the customer has shared less information. We can use this for a whole bunch of applications. Verification of identity for large payments, confirming identity when digital signing of legal documents, when you're renting an apartment, when you're accessing online gaming, renting a hotel or doing any kind of a vacation rental, setting up a dating profile, setting up an HR profile, applying for a gig economy job. In tons of instances, this can be used as a simple flow to prove your identity without sharing too much private information. We can use it in a financial setting too, to confirm that you really want to pay a bill, or if you're running a business, to confirm that the person who's in charge of the business wants to authorize that payment that maybe a more junior employee has set up. Or to do things like confirm that this person really is the CEO, she can really sign legal agreements on behalf of this legal entity, and she is signing an approval right now. Banks bring value to the digital trust network because they are the best out there at KYC, at Know Your Customer. They're required by regulations to go through a Know Your Customer process. Banks also are very good at doing strong customer authentication, being certain that they know who you are when you're logging in. And finally, banks keep their customers' data private. Tech companies monetize data about their customers. They take it and resell it to advertisers. Banks keep it completely private. If your bank was reselling information about your purchases, you'd move to a new bank. No bank does that. All regulators prevent banks from doing that. Because banks are regulated, they will and do protect your privacy. There's a precedent for this kind of system. It's called BankID. It's based in the Nordics. One of the companies that helps run it is called Vipps. It's in Norway. On average, in Norway, customers use the BankID system to rent a bicycle or log into a new system 192 times a year. And that means it's 192 times a year that the Reliant party, the online business, is getting bank grade confirmation that they're dealing with who they think they're dealing with, and the person is getting bank grade protection about their privacy. The technology is relatively simple, and it has been open sourced. It's designed to sit in front of existing bank systems. So the existing onboarding for new customers, the existing bank identity systems, and the existing bank risk management systems all sit behind this new thing, the digital trust provider. In order to share this, we've established something called the Open Digital Trust Initiative. It's being headed up by the Institute of International Finance and the OpenID Foundation. The group is trying to determine and come up with a set of policies and recommendations to create a fair digital trust network that can support transactions around the globe. A key part is to make sure that individuals and businesses can control their own data. That means we've made it user-centric. Another key part is to make sure that the technology that powers all of this is open source and available to everyone, free without a centralized company controlling the flow of information, compromising people's privacy in any kind of a way or gobbling up any potential profits. Our hope is to create something that is used globally, just like HTML is used to define web pages. And with all of that, what I'd like to do, if you're interested in this, is recommend that you look up the Open Digital Trust Initiative, reach out, and join our team. See how this could benefit your business or your bank. Thank you very much for your interest today.